Hi, welcome to the Market Alert for Wednesday, 4th of December 2019. So, tariff tantrum sparks worst start to December for S&P since 2008, which is interesting. Same as the repos, the bond yields, and everything else. So, an interesting headline there. Normally I wouldn't take too much notice, but 2008 mentioned there. Of course, that was the year of the known as the Great Recession now. Start off with the Dow. As you can see, yesterday the market sailing through the 20 bar moving average on Monday, Tuesday, continuing this. But most of the damage was actually done in the pre-market session. It wasn't actually done in the main event. As you can see here, the market breaking through the 200 MA 20 bar and then sending the market all the way down over 200 points until the start of the session, and the market just traded sideways and eventually found some support. 76% retracement from here to here, back above the 20 bar moving average, and then they managed to bring the market back by about 50% during the main event there. And overnight, prices have continued to trade sideways to higher and are now through the 200 bar MA there and heading towards the DP level, the daily pivot level, which is the next target. So a good shakeout there for yesterday, but like I say, all done and dusted in the pre-market session for the Dow there. It was a good move. I don't know what the news is. I should imagine from the headline that again this tariff thing is being used to move the markets about and shake out traders. So there you go. You can see that selling there taking place. And then of course the implied volatility moving higher, not by a great deal. 1434 for the implied, up from 1339 the day before. And there you can see in red now for the implied volatility. You've got a ways to go if this is to continue on its decline. Now it's closed above the 200 MA. And again, what we're looking at here is the market trading down towards the 200 MA. That's where it's corrected to on previous occasions, which you can see. You can drag this chart all the way back and you'll see the market having traded down to this level. What looks impossible to begin with, you'll see the market actually doing this. December 18 as well was also an interesting month as well, because the market sold off there. And then the Fed stepped in. They had a meeting globally with the central bankers and they brought the market racing back. And again, you can see more corrections to 200 there. So not impossible at all to trade down to the 200 MA, where we see prices already starting their journey towards it at the moment. And Bitcoin, very boring. Unfortunately, barely yesterday $100 range. As you can see, the two blue lines here are $100, and you can see the market stuck in this range. Became even narrower, just down to $50 late afternoon. Just very, very tiring. However, in the daily chart, we can see that prices are now starting to move back to the downside. So again, what I would be inclined to do here is to draw in a 76% retracement just to see how prices fare when they get to this level. Also, this ties in more or less with the recent low here. We do have the other low as well, which we can see here at 6516. So keep an eye on that, but at the moment very quiet for this market. Okay, that will do it for this one. Short and sweet. Keep an eye on the Dow rallying in the pre-market session to potentially fail and then move back to the downside, as this is under pressure at the moment. And Trump is away, of course, over in Europe at the moment. with us. So we'll see what he's tweeting out to try and keep the markets moving back to the upside following the correction. Okay, that's it. As ever, thanks for watching. Actually, just thought before you go, news today. What other news could move the market? We've got the most important one would be this one, 0115, the ADP non-farm unemployment change, and of course we've got this on Friday as well. So keep an eye on that one at 115. That could move the markets too. I noticed that crude oil inventories has now been put back to a medium-term impact news item as well. This has been a high impact one for a few years now, when crude oil dropped massively, but now back to medium impact. And then you've got the ISM non-manufacturing PMI as well at 3 p.m. But the market's only interested in the rumours at the moment regarding the trade deal with the US and China. That's it for this one. Thanks for watching. See you in the next one.